Hello traders, and welcome to StockGoodies Chart School. Ease of movement was developed by Richard Arms, and it is a volume-based oscillator that's designed to measure the ease of price movement. Its signals are given when EMV crosses above and below the zero line. Prices are advancing with relative ease when the oscillator is in positive territory, and prices are declining with relative ease when the oscillator is in negative territory. Arms created EquiVolume charts to display price ranges and volume. Ease of movement takes EquiVolume charts to the next level by quantifying the price-volume relationship and showing the results as an oscillator. Now, first of all, let's go ahead and load up his EquiVolume charts here on this chart of AMD here at StockCharts.com. Now, in the chart attributes area, the type of chart, EquiVolume. Okay, let's go ahead and click Update. Now, this shows only the high-low range for the day, and volume is expressed in terms of the width of the bar here. Okay, so right here, low volume, very tight, very narrow bars in this area, and then a nice big wide green bar on an up day, and then on the breakout above all resistance, you've got the biggest volume on the chart. It's the widest, it's the tallest, and then you have three in a row, and then here on the gap down on bad news or bad earnings, you have the biggest, widest volume bar of them all, the tallest and the widest. Okay, so people did not like the news that day. Okay, so it gapped down from about 480 to an open just above 4 and closed well below 4, closer to 380. Okay, so now since we do candlesticks, this is a great idea. It's a visual representation of volume and movement, high-low range only. So for the purposes of EMV, this lesson here, let's go ahead and look at another type of chart, which is called candle volume. It's just like the EquiVolume chart, but instead of just showing the high-low range for the day as a solid bar, it actually shows the upper wicks, the lower wicks, and the candles. But the candles themselves are represented with volume by their width. Again, a big wide red candle. Over here, a big wide white candle that closed at the high of the day on the breakout into blue sky territory, and the highest close on the chart at this time. Again, just what you want to see. Huge volume on the breakout of resistance. Okay, big volume at the top. Volume falls off on this symmetrical triangle chart pattern as it finishes forming, and then boom, the big volume comes in and it breaks out above all this resistance right here. Okay, and ends up breaking this resistance right here on this day with pretty good volume. Now, you would have wanted to see a bigger, wider, taller volume day on this day as it broke out into blue sky territory above all resistance to the highest point on this chart. And then unexpectedly this happens. Okay, that's the nature of earnings. So for the purposes of this, let's go ahead and load up the indicator, which is EMV, ease of movement. It's set at a standard period, look back period of 14 days, and you can adjust this one to your liking, either faster or slower. Go ahead and click Update, and here is EMV set at a 14 period with a reading of minus 0.007. Okay, so what it's saying right here, ease of movement. Prices are advancing with relative ease when it crosses up through the zero line into positive territory. So this was a very easy move on high volume. It was very easy. People were just enjoying this very much. Uh, and then it kind of does its consolidation in an uptrend, which is generally bullish, especially when it forms a perfect symmetrical triangle. Now these can break either way, but it gapped up and ran and closed at the high of the day. And that was a fairly easy move because it did pop above zero for a very brief time on that. Okay. Now, ease of movement in a downtrend right here. It is showing that it is very easy because of the low volume. This is low volume down, easy low volume down, which is really quite negative, quite bearish. But right here is where it changed. It went from being mostly easy down to very easy up, extremely easy up. Now let's take a look at Ford Motor Company, ticker symbol F. Okay, as you can see, I'm using the candle volume charts here. This is not just your standard candlesticks. You can see by the width of the candle here and the width of the volume bar. Okay, so what the EMV is saying right here, it's above zero. It's saying this downward move wasn't very easy. There was pretty big volume here. And then after this huge volume day, where it really didn't go down a whole lot, it became very easy down, all the way to right about here. Okay, so this move was very easy down. This was low volume down. It actually increased as it came towards the bottom. Okay, and then there's some pretty good volume at this bottom, just like there's good, decent volume at this bottom too. Oh, what a nice candlestick. Okay, but one reason you don't want to use candle volume all the time is because it kind of hides the true shape of this candlestick. And if you can see this one right here, now you can see it a little bit better. Okay, so right here, it starts up. This move right here wasn't very easy. Okay, this down move wasn't easy at first, but then it became easy. Then right here, this up move was very easy. Volume started picking up. So that was an easy move. It continued to move easily this entire period until right here. Okay, then it started to move easily down more than up. A little bit of up here. But that's a descending triangle chart pattern. And when it broke below support here and here, it fell and formed another doji. That's a long-legged doji on pretty high volume. Okay, there's your high volume at the top, by the way. Okay. So this was a very easy move down to form the reversal candle of a long-legged doji. Then it was hard at first to get it to move up, but as soon as it cleared this area of resistance right here, it was breaking out into blue sky territory above all resistance. Volume was huge when it did that, just like you want to see. Okay, let's switch back to the candle volume. You'll be able to see that better. Okay, that was the day it broke out. It closed above all resistance on the biggest volume in a couple of months. And that's a big wide bar there. It's the biggest, widest, tallest candle bar. And that's one of the most standout looking candlesticks this entire time. So the rest of the run from right here on the breakout on big volume, it was pretty easy. It didn't take as much volume. It was breaking out. People were thrilled. Nobody was selling. It was breaking out into blue sky territory. Okay, right here, things changed. It became more difficult for it to go up. Okay, and then right here, it was very difficult. I mean, not like it was down here, but it was under zero. And this looks like kind of a breakdown pattern to me here. Okay, but not yet. I would need to look at some other things. But now you can see how using the candle volume charts with the EMV 14 really gives you a good read of which days are important on this chart. Okay, super huge volume, doji candlestick, it pulls back. You know, this wasn't really a bottom. You know, pretty good volume right here at the bottom here. Real big volume at the top. So you're looking for the big volume bars down here. You're looking for the big wide candlesticks here and here as it broke out of resistance there. Very easy move for it. Okay, so I hope you're getting the idea, but do not recommend using candle charts all the time. I mean, if you want to, go ahead. I mean, they're pretty cool, really. Okay, but I like to see the shape on some of the other charts when the volume bars are so tight and small together and the candles are so tiny, you can't really see their actual shape to do proper candlestick chart analysis.